So I'm going to demonstrate the first 3 steps of the accounting cycle with this problem. So we're going to start off, we're going to record journal entries for the month of December. So the first transaction is the owner invested $1,000. So in our journal, we're going to put December 1st. We're the company receiving the $10,000, so we debit cash. Cash is going up. And then, since we're getting an investment from the owner, we're going to issue shares of stock. We credit common stock. And so then you would enter an explanation. I'm not going to enter it. It's pretty much here, just owner investment. But in my accounting lab, the very last line, there'd be a drop-down box, and you would choose the explanation. The next transaction, received cash for a job completed. So again, cash is going up. So we're going to be debiting cash. So this will also be on the first. Debit cash for the $3,200. And then again, we need to indent. And since we completed a job, that means we have earned service revenue, $3,200. The next transaction, we paid the annual insurance premium. So the date is the 6th. We see the word paid. That means cash is going down, so we'll credit cash, and we're paying the annual insurance premium, so we're paying to be insured for the next year, so we're paying ahead of time, right? So we will debit prepaid insurance for the $1,000, and we'll credit cash. Next one, we billed customers for jobs completed. So again, we've done work. We've got service revenue here. But we're not getting the cash, we're billing them. That means our customer owes us. So our debit is going to be accounts receivable. Whoops. And our credit will be to service revenue. On the 23rd, we paid our utility expense. You see the word paid, we know we're crediting cash, and we're paying our utility bill, so we'll debit utilities expense. Whoops. 78, credit cash. All right. The 29th, we received cash from a customer for work to be performed in January. We're receiving cash. Cash is going up. Cash goes up with the debit. We haven't done the work yet. We're not going to do it till January. So as of right now, we owe our customer services. So when a customer pays in advance for services you're going to perform later, we have a liability called unearned revenue. That's our credit. And then finally, we paid our dividends. It's the last transaction. So our debit is to dividends. Dividends has a debit balance. It goes up, and in the normal course of business, it only goes up by 100. And since we're paying, our credit is to cash. So now we've recorded all of the journal entries. So our next step now is to post to the general ledger. All right, so now we need to post a debit to cash. We need to transfer $10,000 to the cash account in the general ledger. So we go to the cash account and we put in the date. All right, so we've put in the date December 1st. We skip the item column. The post reference, we say, where is this coming from? It's coming from General Journal, page 25. So we put J25 in the post reference column. And what we're moving is a debit of 10,000. So that's what we're posting. We'll put 10,000 in the debit column. It had no balance prior to this, so now it's got a 10,000 debit balance. And since this is account number 11, we're going to put 11 in the post reference column next to cash. Then we need to post a credit to common stock of 10,000. So we go to the general ledger. We scroll past the assets, the liabilities, and we come to the stockholders' equity. We put in the date, December 1st, skip the item column. Post reference is General Journal, page 25. We're posting a credit of 10,000, and since there was nothing in the common stock account, it's got a credit balance of 10,000. It's account number 31. So we put 31 in the post reference. So that went and's been done. Now we have another transaction on the 1st. All right, so we have to post our debit to cash of 3,200. So go to the cash account. This is also on the 1st. Skip the item column. It's J25. We've got a debit to cash of 1,000. And so now the balance in cash, it was a 10,000 balance, but we posted a debit, and a debit and a debit will be added to get the new balance of 11,000. Again, we put the post reference 11. Now we need to post the 3,200 credit. Oh, so I think I posted the wrong amount. Let's go back. That actually should have been 3,200. So that made our balance 13,200, the 10,000 plus the 3,200. Now we need to post the credit to service revenue of 3,200. So the date, this was also the 1st. Skip the item column. It's J25. We're posting a credit of 3,200. Since this is the only thing in here, it's got a balance of 3,200. And since service revenue was account number 41, we put 41 in the post reference column in the journal. This is the debit of 1,000 to prepaid insurance. So we go to prepaid insurance. So with the assets, what was the date on that one? That was on the 6th. Debit of 1,000 on the 6th. Skip the item column, post reference J25, debit of 1,000. It's got a debit balance of 1,000 because that's the only thing in here. This is account number 18. Now we need to post a credit to cash of 1,000 from the 6th. So there's the date, the 6th, J25, post reference, credit to cash of 1,000. Okay. So we had a debit balance of 13,200. A debit and a credit get subtracted. So 13,200 minus 1,000. Now we've got 12,200 in cash. Again, this is account number 11. Now we've got a debit to accounts receivable of 600 from the 14th. Skip the item column, J25. It's a debit of, what's that, 600? 600 debit balance. That's account number 12. Now we got to post a 600 credit to service revenue. J25. This one should say J25 too. And so now the balance in service revenue, it was $3,200. And then we add the $600 we just earned. A credit and a credit will be added. So now we've got $3,800 in service revenue. And so we put in the 41. And we'll go through and we'll do the same thing for the remaining. Utilities expense, we've got a debit of 78 that we need to post. So here it is, December 23rd, J25, 78 debit, and now that's the balance. 51 is the post reference that we put in the general journal. Now we need to post a 78 credit to cash. So we post that 78 credit, and to get our new balance, we had a $12,200 debit balance. A debit and a credit get subtracted. So we subtract 12,200 minus 78. 12,122 is the balance in cash, and we put 11 in the post reference. Now we go to the 29th, we need to post the 565 debit to cash. So now to find the balance in cash, it had a debit balance as you would expect, a debit, and we're posting a debit, so we add the 565 to get our new balance. Come back to the general journal, we put in 11. We got to post the credit to unearned revenue of 565. So we post that credit. That's the only thing in unearned revenue, so it has a balance of 565. We move the 24 account number into the post reference column. And then our last journal entry, we need to post the debit to dividends of 100. So here's the 31st. It's a debit of 100. That's the only thing in dividends, so that's 100 balance. We come back. We put 33 in the post reference column. We need to post that credit to cash. Go to the cash account. Here's the 100 credit. It had a balance of 12,687 debit balance, and then we posted a credit, so we subtract the 12,687 minus the 100. 12,587 is the balance in cash. Put in the post reference. Now we finished our posting. We can go ahead and we can do our adjusted trial balance. I'm sorry, I need to correct myself. This is actually the first trial balance we prepare is the unadjusted trial balance. We haven't done adjustments yet. That's next chapter. So all we're doing is we're listing out the accounts and putting their balance in either the debit column or the credit column. So actually this is really easy in Excel when you're doing your Excel lab and doing a trial balance equal, and then just click on the first letter in cash, it brings it over. Then we want the balance equal, go to the general ledger sheet, and we bring over the 12,587 in the debit column. And that's what we do. Just go to the general ledger sheet. We're going to go down. We're going to bring over the account names. So you can see I can just do this in a matter of minutes. I'm not typing. It's got a 600 debit balance. And we can bring over all of our assets and put their balance in the debit column. Got 1,000 balance. That's all the trial balance does is listing. So this is actually a very short one. That's all of our assets. Now we've got our only liability is unearned revenue. That's got a credit balance. All right, it's a liability. 565. Now we've got our stockholders' equity accounts, common stock, and that has a credit balance of 10,000. And we can do that for all of the accounts. All right, dividends had 100 debit balance. Service revenue had a 3,800 credit balance. Utilities expense had a 78 debit balance. And so after you've listed all the accounts and then put in their balances, then we want to total up the column. So we're totaling up the debit column, 14,365. We total up the credit column. That also totals 14,365. And that's what needs to happen. We need to show that the total of the debit balances equal the total of the credit balances. That's the first 3 steps of the accounting cycle.